All right, guys, what is going on? What is Gucci? What is Gucci, chat? Are we live? Oh shit, we are. Okay. Chat, I can't find the camera. Okay. All right, we should be good now, chat. Sorry. It is Monday, you know what I'm saying? Market Maker Monday. But I thought of a better title, so. Did he? Oh, yeah, I did. Fernando. Gosh. Couldn't even last 6 minutes. Dang. Couldn't last 6 minutes without a curse word, chat. It's too cold outside. You know, when it's cold, it just makes you want to cuss. You know what I mean? Maybe you don't. I don't know. Maybe I'm just making excuses. I don't know. Let's talk about the markets instead. How about that? What's good? MJ, Scott, Jorks, Mason, Eric 2020, H, Shay, Adam, Fernando, Eberneth, Scott. Scott's over there laughing. You think that's funny? You think that's funny, Scott? You know what else is funny? Is good trades. Good trades that make you smile. You know what I'm saying? You know what I'm saying, Omar? Torrity? Good trades will put a smile on your face. I don't feel anything when I trade. Yeah, okay. Okay. I know a liar when I see one. When I lose, I don't feel anything. When I win, I don't feel anything. Yeah, okay. Okay. Sure. Sure thing, buddy boy. Other people might, you know, they might believe you. I do not. Right, twins? Denelson? Scott's always up for a good laugh. Oh, yeah. Oh, yeah. Just look at Dow 1 minute chart if you ever need to just laugh. You know what I mean? Because it's just absurd. What's good, Patch? Hold on. I'm just going to take my socks off real quick. Okay. Where to start, bro? I don't know. I don't know where to start. Let's start with this morning. First of all, Top Step, okay? What's going on with Top Step, man? What is up with that chart? What is up with that? I posted at 9:30. We had some more problems with I feel like Top Step just does shit just to get people talking for like free marketing at this point. Like, there's so many issues that I feel like they just do that for free marketing, because there's no way. There's just no way your platform is that booty cheeks. There's just no way. I feel like they just screw things up on purpose to get people talking for free advertising on social media. That's what I think it is. Okay? So there's my tinfoil hat idea for today. You can sit with that. All right. At 9:21, I said, gotta love when markets are bullish, but then leave clean lows. So what does that tell you? Cameron knows, because Cameron actually followed up a little bit later. At 9:43, I said ES may want to run some lows. And then I said sweep, because I actually meant to say sweep, not run. There is a difference. And then at 9:51, some random obscure fucking time window, we get the sweep on liquidity, right? So that's interesting. And just keep getting lucky in the Discord every week. It's insane. Okay. And then at 10 o'clock, I posted the chart of the AMD. I'll go over that as well. Then we got some more stuff in there. And then, yeah, I posted a selfie of me and my glasses just to be funny. And then we got into some details on some price action, but I'll give you guys a visual. Do you guys want that? Drop some ones in the chat if you guys want to go over some visuals. Oh, it was the Top Step X platform is what I was referring to. Oh, they're a different entity to Top Step? Yeah, that makes sense. If I had that many problems, I wouldn't want that attached to me either. I would not want that attached to me either. Shorted ES through those lows as well. Got a nice 1 to 3 holding NQ longs now. Cameron, you're a G. You're a G for that. What's good, Marshall? Yeah, you're a straight gangster for that. Oh, we got 50 people on here. Okay, cool. You guys are ready to learn, huh? You guys are ready to learn something, aren't you? All right. I guess we'll start with the higher time frame. We usually do that, don't we? We usually do that, yeah. So Friday, I lied. We're gonna go back to the higher time frame, but I want to cover Friday because that was beautiful. And Friday, we never get a chance to follow up because it's the last stream of the week, so we have to wait until Monday, right? So let's do a real quick recap of Friday, and then we'll go to today. Do you guys remember we talked about all those price levels? Remember we talked about the equities open gap and I think it was NQ that had the equal highs here. I don't know if Ricky's watching, but he did call out those highs as well. So tipping my hat to you, sir. And this gap up here, I talked about how price would not stop at equal highs. It should not stop at any particular high. And we know that price trades from what to what? Or what are the two things that price can trade to? Let's go back to the basics. What are the two things that price can trade to? If we don't have one, we probably have the other. All right, George, we somehow misspelled both of those, but that's okay. At least you got it right. We're sellers, not spellers, baby. And we continue to prove that over and over again. I do it too, though. That's why I talk shit, because I do it too. I can't. That's why I get nervous when I type in front of you guys, because I know I'm about to misspell something in front of 50 people. So that's always nice. And that's always nice. We can literally trade our ass off, but you look like a genius calling multiple moves in advance, and then you go and you spell, you know, I don't know, you spell something wrong in front of people, and you're just like, this guy's not as smart as he appears to be. Top Step Dev created Project X for Top Step, called it TSX, and then due to its success separated it from Top Step and started offering it to various other props as an independent company. Oh. All right, well, thank you for that. Anyway, back to the basics. Number one, price trades to two things. Price will seek two things: liquidity and inefficiency. Remember that? Now, I gave you that way, way, way prior to Friday, right? But then we walked through it. We don't have to go back and watch the whole stream, but I walked you through it, and I said, look, we got all this price action here. Overnight was disastrous. It was straight lower. So a lot of people were short. Where did their stops go? We talked about a recent high, then we talked about the next high, and then we talked about that gap, right? And then guess what? There's no inefficiencies in here. If there was any inefficiency, they already, like, there's a small one right there that got traded into and lower again. So it's not like open, you know what I mean? So if there's no inefficiencies, it's likely to seek liquidity. And then look at that. The Corvette candles printed right there just after this, like 30, 40 minutes after the session, we started printing Corvette candles, man. Beautiful, beautiful stuff. And we kept going all the way into the close of the day. Man, that was just straight marvelous, broskies. Remember this? Same idea for NQ. Remember we talked about like the 150? I don't know if I said 160. I know I at least said 150. That smacked right there in the MOC, baby. Okay, this is why the title is how it is. Okay, it's not to be egotistical. As much as I enjoy that stuff, I do. But, like, listen, we talk on here all the time about precision. Look at the precision of time, price, and context. Okay, it is utterly undeniable. Undeniable. And if you did any sort of study, which I didn't do this until just now, but look at our macros all day on Friday. Did you guys look at that this weekend? No, you didn't. You didn't look at it. You never do. You listen to me and you go, yeah, that's cool. And then you just don't do anything until I stream again. And then you're here. 11 o'clock macro set our low of day. The 12 o'clock macro back below October 22nd low, into that imbalance, left part of it open and traded higher. 1 o'clock macro, we had a retracement lower, and then we rallied. Okay, now that move higher was outside of a macro, and I really haven't done, I don't know if Jordan D is here, we haven't really done this study like we said we were going to do, because I don't know what happened to that. But what I'm trying to study is if price meets liquidity outside of a macro, if that means something. Like, oh, we traded into the equal highs, but not during a macro, so we should see a continuation. Like, that's something I definitely want to study. So, but anyway, moving on. The 2 o'clock, the 2 o'clock macro really didn't do anything, but our 215 traded lower to 245, right? A little bit right here. And then our MOC took us higher one more time. So this is what I'm saying, chat. When you look at a price chart, and we're going to look at today as well, but you know, we got to do a follow-up, okay? This to me is why I believe it's algorithmic. You get me? I think this entire thing here is algorithmic. And you either hop on board with it or you trade against it. You get me? And I know that sounds weird to a lot of people because a lot of people don't get indoctrinated into algorithmic principles or, you know, algorithmic concepts when they first get into trading. You know, people get right into either like supply and demand or support and resistance, you know, whatever. And they learn that like buyers come in or sellers come in or buying pressure, selling pressure, all this stuff. And they hold on to that. So if they ever come across my stuff or a bunch of other people's stuff that trade this way, or at least view markets this way, they will fight the idea that an algorithm controls price. They'll say, oh no, that's not true. It's got to be, you know, there's got to be like volume and buyers and sellers and stuff like that. And again, it's not to be disrespectful or anything like that. I'm just giving you my opinion. This is my opinion, okay? And what I've been showing you for the last number of years is the evidence of that. We are seeing elements of precision, meaning not just price itself, but the timing windows as well. We are seeing elements of precision with just a price chart. No indicators, none, right? There's no indicators here whatsoever. Okay, I mean the macro, sure, yeah, it's showing you windows of time as like an indicator, yes, but it's only an indicator to represent time. What I'm referring to is like oscillators or relative strength index, like, you know, buy below 30, sell above 70 or whatever it is. Like overbought, oversold. That's what I'm talking about. I don't use those, right? I don't have any of that stuff here. But yet you still see the precision elements every day, right? So let's go to today now. Actually, let's go to I liked ES a lot better personally. Okay. So this morning, actually, we're going to take our macros off because it is too, it's too much. Okay. It is too much. 921. Gotta love when the markets are bullish, but then leave clean lows. So 921, right? It's here. Is that right? I thought it may have been earlier than that. Okay, whatever. I won't argue with it. 9:21 a.m. Gotta love when the markets are bullish, but leave clean lows. So that was, I guess, right here. So with that, what do you do? What do you do? Well, you look for clean lows, broskies. And this whole thing here, which again, if you're in our Discord, you've seen this already, but look at that consolidation, right? Equities open is right there. That's why that measurement is here, because it's measuring the Friday's close to Monday's open here. But before we get to that, consolidation with equal lows. So we leave it, retrace, and then we consolidate again. So what is that starting to look like? AMD, accumulation, right? What's after accumulation? Manipulation, right? Accumulation, manipulation. So what's after manipulation? The low risk short, the low risk buy. Yes. But with AMD, I meant the pattern, I guess, the formation, right? Accumulation, manipulation, distribution. That's why when we were like right in here, like at 43, I think it was, I was saying, yeah, those low, like, look at those lows. They're fixing to get wrecked. So what's at 9:45? That's a new 15-minute candle. It trades higher. Couldn't even get to that imbalance. And then 9:50. Oh, what's 9:50, you say? 9:50. 9:50. 9:50. Right? I keep telling you. The macros, baby. 9:50 to 10:10. That is the 10 o'clock macro, right? Price is, well, it is trading lower. I'll give it to you. But price doesn't start printing the mega candles. Okay? Price does not start straight dumping until when? 9:50. Algorithmic. Again, it's evidence, right? Algorithmic. Everybody didn't agree. Okay? Everybody didn't go on a Discord or a Telegram or Facebook or whatever. You know, it's not like Donald Trump came out and said, all right, America, it's 9:49. We're all getting ready to short. Hit the sell button, baby. And then everybody magically came together, shorted, and then traded lower. No. It's algorithmic. The algorithm, I say this all the time, but we got like 60-something people on here. Maybe you're new, maybe you're not. But when it comes to the algorithm in the way that I understand it, okay, it will reference price levels, right, as it relates to time. So it's a script, okay? So 10 o'clock, meaning 9:50 to 10:10, it is a short-term script, which means it's going to reference liquidity, and it's going to go, hey, pre-market, this may not be London's low. London's low is like way down here, and it would take a lot for it to get way down there. Oh, maybe it does trade down there. Right there. Yep, I think that's London's low anyway. Well, I thought we didn't get London's low till later. That's even that actually further proves my point. That's crazy to me. But anyway, at 9:50, it's going to run that script. It's going to say, okay, where's the liquidity? At these lows. And then if need be, because again, I don't always know how far price is going to extend during that macro. I don't know. But in this case, let's actually zoom out just a little bit. In this case, right, it referenced those lows and London's low. So it went all the way down for that because it hit that at 10:05. You see that? Algorithmic, man. Instead of a 2, drop algo in the chat. If you guys are with me so far. If you're getting what I'm, picking down what I'm picking up, or shit. If you're picking up what I'm putting down, there we go. Drop algo in the chat. It's members only today. It's members only today. It's one of the benefits you get here. But like, how can you look at this chart, right? I'm going to take AMD off for a minute because, again, we're getting a little bit cluttered up. But I did want to show you the AMD pattern, right? And how can you tell me that right there, we start printing the candles, market, it rallies a little bit into this imbalance, and then continues, and then the low of that macro just so happens to be a like 1 or 2 ticks, a couple ticks or something below London's low. Cameron, you're blocked. But again, chat, like this, even to this day, it fascinates me so much. It's so fascinating to see. A lot of people don't watch it, so they never learn how to see it. They never learn how to see it because they don't know what to look for. What's all this algorithm stuff he talks about? 11 o'clock. To me is like the lunch macro, basically. But 10:50, we were chased a little bit. No big deal. And then we send for higher pricing. Again, like towards these highs up here, which to me is an original consolidation. Because when you look at it this way, that's why I said before our stream, when power of 3 turns into power of 6. Because we had AMD here, and the manipulation here was the accumulation, manipulation distribution. So I don't know if you guys caught that or not, but it's okay. Original consolidation, London's low, which is a short-term low, and then manipulation. You see how it stabs? Let's zoom in. You see how it stabs below London's low again? What is that? Ooh, 70 people. Welcome, everybody. I may open the chat near the end. Maybe. If you guys behave. Most of you are behaving. I don't know about Cameron, but everybody else is pretty good. Price didn't really look algorithmic to me, but the time for sure shows algorithm. Yeah, Mason, you're blocked too. That's why we're losing viewers, because you guys get blocked. That's why. This is a lower low, chat. This is a lower low below London's low. Uh-oh. It's cold out here, baby. I don't know about you guys. It was like 40-something degrees this morning, overnight. It's cold. And I'm all out of chicken noodle soup, baby. But you know what we do got? Yeah. I don't have chicken noodle soup, but we got turtle soup. Look at that. Look at that. I actually saved a turtle the other day, by the way, when I was walking the neighborhood. Y'all don't even know. It was a baby. It was like this big. I almost stepped on it. I was like, bro, what are you doing out here? So, anyway, I don't have the coolest stories, but it is real life, okay? So anyway, turtle soup, macro, this low here ends up, it's a really distorted and kind of a janky intermediate term low, but there it is, right? Original, sorry, the first sweep, the first like price trading into London's low the first time here. Then we get turtle soup. Then we get this short-term low in the 11 o'clock macro. So now we have an intermediate term low. Boom. Right? What manipulates typically? Oh, mitigates. Man. Where do all these sayings come from? Where do all these little gems come from? What manipulates typically mitigates. Look at that. That might be outside of a macro time, but that's okay. Every trade, every price move doesn't have to be inside of a macro time window. It doesn't have to be that way. I like to exit during macros, though, I'll tell you that. That's why I keep saying on Instagram, what time is it? What time is it? So, again, it's just, you know, I keep getting lucky, chat. And same with you. You just keep getting lucky, right? Look at our 12 o'clock macro. 11:50. Okay, watch this. You still don't think it's algorithmic? You still think I'm full of shit? Okay, 11:50. Boom. Towards liquidity. 11:51. Boom. Buy side met. Algorithmic. Come on, man. Look at that. Look at that. It's algorithmic, bro. It is controlled. Okay? It is controlled heavily. Now, it's otherwise hidden to most people because you cannot find what you do not look for. You get me? If you don't look for it, you will not find it. You know what I mean? I had an analogy, but I stopped myself from saying it because I think it's stupid. But you're not going to find something until you look for it. How do you know what to look for? I'm giving you all this stuff in this stream today. I'm giving it all out to you. Right? What have we talked about so far? Well, we talked about AMD, which again, we discussed that last week. Okay. AMD, I mean, it is a broad, pattern, I guess, if you want to call it that. It is a broad framework, but it's understanding that the market, it may be bullish in the short term, but it's Monday morning and we left behind equal lows, and the market's overall bullish on a higher time frame. So if it is bullish on a higher time frame, it's going to run, or it's going to sweep rather, lower time frame liquidity. Small time frame liquidity before higher time frame liquidity. Almost every time. Again, more nuggets that you're not going to write down, and then you're going to take a losing trade and be like, oh shit, I got that wrong. Right. You didn't look at your notes. You got to take notes, chat. We talked about AMD. We talked about what an intermediate term low is. We have a short term low, turtle soup, and then another short term low. So those three like that makes this an intermediate term low, which means what? We will not go back to that low. We will not go back to that low. So if we will not go back to that low, where does the stop loss go on like this retracement here or that mitigation? Well, that mitigation, after this is already panned out, it's definitely not coming back for this low. So mitigation could be along. Stop down here. Boom. Manipulation, low risk buy. Uh-oh. Uh-oh, sauce is coming out now. Original consolidation. Distribution, right? Distribution on the left side of the curve, right? Uh-oh. Distribution on the left side becomes, oh, accumulation on the right side. God. Wow. Look at that. Mitigation. Reaccumulation. Law of the return. Manipulation. Low risk buy. First leg. Uh-oh. What's that? What's after 1? What's 1 plus 1, baby? Oh. Second leg. Oh, gosh. Drop some 2s in the chat, man. If you guys are not excited right now, drop some 2s in the chat. Do you guys not listen, bro? Do you see it? Do you see it? Well, John, I don't trust the mitigation, though. I don't like the mitigation. Is there anything else out there, bro? Is there anything else out there? All right, well, okay, you don't like the mitigation? That's fine. Mitigation don't like you either. What's next? Well, I didn't take the mitigation, John. It's too late. It's too late. I missed the move. I'm crying. Okay. Well, you miss it then. Go ahead. Down candles. Traded through. What does that become? Oh. Well, these are ass candles. We'll put it to you that way. Those are ass. Don't write that down. But there, at least at 1120, to me is more of a distinctive shift in the state of delivery. Right? Then we trade back into it. That could be a long too. Oh, well, I missed that. Now it's over. It's over. Again, this is what you think. You think it's over. We trade higher. We had down candles print off of down candles. So what is that? Propulsion. Ooh. Hot damn. You're learning all the concepts today. And the frameworks. Look at that. Look at that. Market maker buy model. Market maker buy model. You see that? And we talked about, Cameron, I'm glad you brought that up, but 921, the markets are bullish, but they left clean lows. Right. So it came down for the lows, then went for London's low. Turtle soup, low risk buy, first leg, second leg. And look at all of the opportunities in here. Look at all of them. The manipulation, the low of day basically is the, you know, that's the best entry in terms of like capturing a move. But the next best one is going to be the next, like the very next candle, or the, let's say the very next higher time frame candle, like at 1045, right? 1045 trades down. That could be an entry based on a new 15-minute candle. That's the time compression matrix, right? Just entering on the next higher time frame candle. Or inside the macro time here as the low risk buy. To be fair, it's hard to justify buying on the way up, so I really won't discuss too much in here. There's a lot of suspensions in here. it prints like 7 out of, I'm not counting that high, but it's printing like gaps at every up candle here. So there's so many suspensions, I wouldn't even know what to do with that. But nonetheless, mitigation's an opportunity. Next candle after mitigation is an opportunity. Reaccumulation is an opportunity. Shift and stay delivery back into that, that's an opportunity. And the propulsion is a opportunity. All of that in here is opportunity. A lot of this stuff down here is opportunity. You're welcome, Adam. I'm glad at least one of you prints off charts. We got a new high of day, Cameron, on, what is that, NQ? Well, that doesn't surprise me at all. I told you guys it was bullish this morning. No, I'm playing. Well, I mean, I did, but I did do that. So, not an original consolidation, but still low resistance highs. And then same thing, right? It had traded lower, then lower again at 1040, and that was the lows down here. That was London's low and some lows here. So if you guys watched Benjamin this morning, he actually called that out, and I think he was shorting this in here, which me personally, I wouldn't have done that. I would have just did what I did and wait for that and then go, okay, what manipulates, right, typically mitigates. Look at that. See that? Whether you use that one, I probably would have went with this higher one, to be fair. See that? They kind of overlap too. But I think I like these higher ones here for the same reason I showed you on ES. These up candles were utilized to go lower. So what was once bearish becomes bullish. So the law of the return would probably be that one. And then same thing here. Down candles, traded through, back into it. Boom. Right at 1124. Gunning for what? Those highs. And beyond that. I don't think we're done. You see how that works? Consolidation, distribution. Okay. There was one thing I missed on ES. We're going to go back for that. What was I saying? Distribution, redistribution. That distribution turn accumulation. So we'll do one more thing on ES real quick, because this was dirty. This was absolutely filthy. And I promise you, you didn't see it. I'm willing to bet you didn't see it. You didn't see it. And again, a lot of people don't see it because they don't know what to look for. Right? But watch this. But watch this, chat. Right there. See that right there? I'll zoom in. Okay, look at that. Right here. What is that? You remember that image of the V? The V image? Again, I still don't know what the name for that is. Remember this? Sell side of the curve, buy side of the curve. What was once bearish, right? When it gets traded through on the other side, it becomes bullish, right? Remember that? What is this right there? Look at that, chat. Look at that. That up candle right there, it was never really like utilized. I mean, I guess it was utilized here. But that up candle, right? Level of distribution. And I keep telling you, distribution on the left side becomes what? Bang. Accumulation on the right side. How do I know when to add on? How do I know when to hold my trades? You guys don't even ask that. Sometimes you don't even know what to ask. I know. I used to be the same way. Look at that. We trade through it, back into it. Guess what? We don't even trade to the low end of it, and we send. Retracement into that imbalance. 11:45. There's your new 15-minute candle. And then 11:50 for ES. Boom. Look at that. Manipulation set the low. Lunch macro was the low risk buy. The 11:15, it's just like a 15-minute candle, right? Like 11:15 to 11:30. That 15-minute candle was distribution turn accumulation. Shift in the state delivery. You had multiple of those in here. That would be the first one. The second one would be a propulsion, right? So that's a late add-on, or how do you know if your trade's going the right direction? This is the number one reason why people who say take a trade and walk away, that's how I know they don't know. They don't know this stuff. Because why would you just hold a trade if it's not going your direction? If it's not showing you evidence that you're on side, were you just going to put your head in the sand? Is it flamingos that do that shit? Or is it someone else? It's the ostrich, I think. Isn't it the ostrich that just put their head in the sand? I don't know. It's like useless knowledge we learn in like kindergarten. Oh, the ostrich, they'll put their head in the sand for whatever reason. I don't know why they do that. Why would you trade that way? I'm going to take a trade and walk away. I mean, I guess in certain cases, if you have a job or something, I'm like, okay, I get that. But like, otherwise, why would you walk away? This is what I'm looking at. How do I manage trades, John? Where do I put my stop loss, John? When can I add on, John? When is the market going to hit my TP, John? You get all this information, bro. You know where it's going to go, and you know when it's going to get there. Like an Uber. You guys realize that? You know, if you ever use Uber before, it'll tell you, we got a driver in about 7 to 10 minutes, and your drop-off time is roughly like this 5-minute time window. It's just like that. Price is no different than Uber Eats or regular Uber. I gotta be downtown by 4:30. Okay, call an Uber at 3:30. Be down there. This is you calling for the Uber. Now, one thing, again, and I gotta humble myself here because I don't know which macro it's gonna be that we're gonna run that high in. We may not even run that high inside of a macro. It might be outside. You know what I mean? I don't always know. Every single candle of the day, every single time window, I don't know it all, chat. Okay? I'm not going to tell you, yeah, our 11 a.m. macro is going to set the low of the day, you know, at like 9 o'clock in the morning. I'm not telling you that in advance. I'm not telling you that at all. Okay? I'm not trying to do that. That's not something that I strive for. What I strive for is getting in alignment with price. Okay? If you thought this was the low here, if you thought that was the low of day and you got stopped out, you can re-enter. I've taught you that too. Re-entering. You got to be patient. The impatient traders thought that this tap into London's low, they thought that was going to be the low of the day at 10:05. They got ran at 10:40. They got knocked out. And that's okay to be a part of. I'm not going to say every trade you take is going to be a winner, because it's not. But when you recognize, oh man, I got wicked out. Okay, we took a small loss, whatever. But now, if you're not going to re-enter here, you can at least re-enter here. Okay? Now, why would you do that? We got to take everything off and clean this up a little bit. If you didn't re-enter at the low risk buy, what makes this a re-entry, or even up here a re-entry? A lot of people don't like that. Why? If that's your target and the low's been set, what do we do at 11:03? What do we do at 11:03? We crossed 50%. That's your signature. That's your signature. Bang. We don't even have to close above it. As long as we get one tick above 68.14 and a quarter. So as soon as we get 68.14.5, as soon as we get that, bang, we're in a premium. But that is also a signature. That's a signature. That is a tipping of the hand at the card table. That's the dealer going, here's my cards. They're not going to be obvious. They're not going to say, here's my cards, bro. Do what you got to do. They're not going to do that. They're just going to kind of flash you a little bit. Sorry, ladies, but they're just going to flash you a little bit. Bang. Crossing 50%. That's your flash. Okay? Gentlemen. That's the market going, all right. We're heading for that. So you can either wait for a discount, which that's where that mitigation is, or that shift in the state delivery early on is still in a discount. And then guess what? Remember I kept telling you, oh shit. Remember I kept telling you 50% is a discount if you're bullish, or it's a discount if you're bearish? What's that right there? You guys didn't see that either, huh? There's a lot of things you don't see. There's a lot of things I don't see either. But again, this is why we're on here. I'm giving you this information. I'm giving it all out for free. I really shouldn't be doing that. But there's 70 of you on here. I care about you. I want you to learn some stuff. And I'm trying to tell you, these are the things that I'm looking for. Crossing 50, back into discount. Shift in the state delivery, back to 50. 50%. Oh, I thought it's supposed to consolidate. Well, it can. But I told you earlier, the markets are bullish. And then we already had the manipulation. So we are more likely to go higher than we are to go lower. You see how that works? That's a good point too, Jordan. I'm glad you brought that up. If we were, you know, I'm shocked actually that it was Dow. Dow, it just, I can't stand Dow Jones most of the time. You know what I mean? Like, Dow is just like something you just want to punch in the throat for some reason. Y'all got friends like that? Don't answer that. All right, so when we have this, right? When we have this, that's how you confirm the manipulation. That lower low, which was the turtle soup on ES, and I think it was on NQ as well. Dow, even though the bodies are lower, yes, but the wicks here are higher. So Dow was under accumulation of all indices. Ugh. Disgusting. Gross. Nobody likes Dow Jones. Nobody trades this dog shit. Well, I mean, a couple of you do, but this is just, the Dow is the Dow, and that's about all I have to say. That's how you confirm. How do I know it's turtle soup? How do I know it's manipulation? This right here. That right there. This by itself is not enough. It's a wonderful concept. It used to be like my favorite. I just look at them all the same now. But growing up as a trader, when I came across this, bro, I was like, this was like my go-to right here. I mean, it still is. It's still really, really good. The divergence by itself, you're going to mistime it sometimes, because you're going to see, like, in certain instances, like there's a higher high here, but a lower high here, and then we continue lower or whatever. when it's like the small stuff like that, or even like, let's say the highs here. Like ES trading higher here while Dow was just complete trash, like normal. That can help confirm manipulation to go lower. You see what I'm saying? But this tool is really great for understanding the low. You get me? So if we got a soup and we got a divergence down there, we're good to go. We can start looking for longs or later entries if you're not getting in near the low. Or if you're getting in near the low and you're excited because you saw this big ass move here and you start loading up your Amazon cart, and then you start getting nervous because the market's trading against you. Okay, what are you nervous for? You know what it's going to trade into. Because if it's manipulation, it's probably going to have a mitigation. So should you be break even? I would say so. If you're down in here, would you put your stop loss in profit at the mitigation? Hell no. No. That's why. And it's okay to drop some threes if you like. Has this happened to you before, chat? We say this all the time. You ever been stopped out and then the market went your direction? Right. Because you jammed your stop too early. I mean, that's still like, let's say a profitable trade, sure, but imagine that. Imagine longing down here, getting out here, and then missing out on the rest of that. I mean, a green day is a green day. I get it. But that's the most demoralizing green day there is. You know, it's like that meme of the dad checking in on his son. Are we winning, son? It's like, well, yeah, dad, but I made $100 in a $400 move. You know what I mean? So yeah, it's great for your account, but it's horrible on your emotions. You're like, oh God, this, I goobered it, right? So that's why we need to have these things on. So the low end of the mitigation, okay, we definitely shouldn't trade down there. So at least if you're in the low risk buy, we could be break even, or maybe a couple points. On ES, maybe like 1 or 2 ticks. I mean, 1 or 2 points. You know, $50, $100 a contract or something, and then hold the rest of it. Sure. But anyway, to sum up everything we talked about real quick, and this is why I said earlier, I think we're going to continue higher. We may not. I could still be wrong, but the reason I think we could go higher is really because of the regular trading hours and because of Wednesday's highs. Like those highs here are just really clean. And that's only about 12 or 13 points higher. So I think that's going to be a later target for today. Excuse me. I've rewinded my way 10 minutes trying to catch all the gems. Page full of notes. This is a master class with no script, right? And I have no notes in front of me. So imagine that. The only reason I know this stuff, bro, is because this is what I look for. I look for the same stuff every day. I may not always get it right. Sometimes I might enter too early or too late. Sometimes just right. Okay. But these are the things I'm looking for. After you know this stuff, after that, it's just going to come down to discipline. The discipline to have the patience to wait. The discipline to watch the market go higher without you, to then wait for the retracement. I got to pin that. He said 99% of the live streams are impromptu masterclasses. Yeah. I still can't get over 100 viewers. That's fucking crazy, right? That's crazy to me. It's because I'm not on TikTok and all these other social medias. That's why. I don't care, though, to be honest. I mean, I wish we had more viewers, but at the end of the day, if people are winning, then who cares? But I got lost in the sauce for a minute. Look at that. Distribution. Turn accumulation. What was once bearish becomes bullish. Look at that. That's pretty cool. It's the same stuff. This would make no difference if this was a 1 minute or a 5 minute or a daily. It'd make no difference. So we got a reaccumulation off of a reaccumulation. Wow. Fractalization. But the markets aren't algorithmic. But they do the same thing on every time frame. Come on. That's crazy. You need to throw that Corvette with a crazy look on your face on the thumbnail. Yeah, I should do that. Look, when I bought that Corvette, I was like, yo, y'all are gonna get sick of me with this damn car. That's all I'm gonna talk about. And then I just don't do it. I really don't. It's I mean, it's a great marketing tool, don't get me wrong. I just posted a story last night. Did you guys see that, by the way? Drop some fours in the chat if you saw my story with the cartoons. That's my fucking life, bro. That's no joke. That's no joke. I thought it was cool because I've seen some of those on threads. I've seen some threads like that. I'm like, oh, that's cool. I'm gonna do one of those. Anyway, let's wrap this up because you guys keep distracting me. You guys keep on distracting me. Don't do that. NQ still has those highs. We talked about that last week when we were down in here. Remember that? Yeah, I mean, this was Friday. This was literally Friday. Remember that? I was saying, hey, long-term markets don't make highs like that. And I'm still bullish. Like, eventually we're going to trade into that. I didn't think we would get there today. I didn't think we'd have a massive overnight, or excuse me, over the weekend. I didn't think we'd do that. But you can just know when to not panic sell stock. Yeah, Mason, I told you. I forewarned you. I drudged through it. I got through it, but I was like, I thought it was done. And then he talks about Elon in like 8 other chapters. I was really close to just tossing that book into the trash. But they're all signed copies. I was like, nah, I ain't gonna do that. But I was mad. I was like, Ryan, what the fuck is going on? Anyway, let me wrap this up. When it comes to the algorithm, okay, price moves algorithmically, which means price will not move until it is allowed to move, okay? The macro times I keep showing you are when the markets, not every time, but typically will make the low. If they don't, they will be used to run price, okay? And again, you don't listen to me, okay? Don't take everything I say and be like, okay, this is the truth. I do that, but I don't want you to take it that way. I want you to take it and challenge it, right? But look, our 10 o'clock macro dragged us lower, right? Very fast. That's when the move started for the indices. Lower. Turtle Soup and London's low. And then our 11 o'clock macro, basically our lunch macro, took us higher, right? Mitigation outside the time, no big deal. Our 12 o'clock macro really didn't do anything. And this macro currently is a reversal, but at the beginning here, like right prior to that, it traded above those highs here, which is still a good TP. So again, like I said, I don't know, 30, 45 minutes ago, the markets may not always run liquidity or sweep liquidity in a macro time. It doesn't have to do that. So the fact that ES did and NQ didn't, I don't know, that's weird to me. But nonetheless, these macro time windows are important. Understanding the framework is important. Consolidation, distribution, redistribution, and what was once bearish becomes bullish, right? So it's getting in sync with price delivery. That's why it's called, I've said this for years, it's called price delivery. It's being delivered. You order some shit on Amazon, it says it'll be here overnight, or it'll be here, if I order something today, it'll be here on the 12th. Right. You order something, then it gets here. It takes a little bit of time to get here, but it'll get here. That's what price does. It delivers. It's going to deliver to those highs. It's going to hit the mitigation. It's going to allow smart money who was short, when they see that, they're offside. So it's going to allow any shorts to get out at a favorable price. It won't mean that if they shorted like down here, for example, those shorts will probably get clapped. But the shorts from up here, they're going to be able to take profit on the shorts before the market delivers higher. That's what it's for. That's the function of a mitigation. If you didn't know that, I have a whole video on that. I have multiple videos on that. That's what it is. Once that occurs, okay, smart money is able to get out. Oh, look at this too. Low, lower low, and then a higher low. So look at that. You got multiple intermediate term lows here. Look at that. Once that occurs, once smart money is allowed to get out of their short positions, then they can add longs or go long for price to be delivered. The algorithm is going to move price higher. Okay, need, not indicators. No amount of volume, no amount of shorts are going to push price lower. It's not going to happen. It's going to run the highs. You get me? That's why, to me, it's algorithmic, and it's going to run over anybody who's trying to short. You're done. You're done. You get me? So that's what I mean when I say, like, I am the algo. It just means I'm in sync with the algorithm. I understand what it's getting ready to do. And if it's getting ready to do something, I want to hop on board with that. You get me? So let's go back to ES for 1 second, then we'll wrap this up, because I could be here all day, and you probably could too, but we'll just get through this. If we understand, okay, higher time frames bullish, it's going probably to the 6860s. Okay, cool. Are we going to buy? Look at this. Are we going to buy after like a 90-point gap? Oh, 50. That's what I get for quick math. Are we going to buy after a 55-point gap to go higher? I'm not going to do that. I don't want to do that. But what we can do is wait. Oh, equities open is here, by the way, too. I did not, none of y'all even brought that up. There's so many things to look for, and there's so many concepts. It's hard to keep up, right? Yeah, but all the tools they point to the same things. Anyway, we get consolidation, then we trade lower, and then again, London's low, turtle soup, old reaccumulation. So then it's like, okay, once we get that, after we cross 50%, I know with a very, very high degree of certainty, there's still some uncertainty, because if you get it wrong, you get it wrong. But with a high degree of certainty, I know that the next retracement, it's going to go higher after that. So you have to have the patience to wait for it to go lower, not get scared. Oh, what if it makes a new low day? No. Higher time frames bullish. Higher time frames bullish. You're just looking at a smaller time frame, right? This is all you see. And guess what? The map is not the territory. That's a mental model. There's Dow, new high of day. Bang. Inside of what? What time is it? Huh? What time is it, chat? It's 1:06. That's our 1 p.m. macro, new high of day. Bang. Algorithmic, dog. I teach with live prize, baby. Look at that. I didn't say that earlier, but I had that alert there and you didn't watch me set it. Okay. Sorry, last thing. If the market is bullish, we want it to trade lower first. Okay? Once we get that crossing of 50% in a buy model, that's a very good indication that the next move after a retracement is going to go higher. So that's what I want to get in sync with. We can buy it on the way lower, or we can wait for a shift in the state of delivery and then get in a little bit after that and then ride that bitch higher. Boom. Easy trades. Easy trades. Where you will get it wrong, okay, is if you miss what's on the higher time frame. If you over leverage and get it wrong, yeah, you're double done. Okay? You're doubly done. what was the third? Oh, I had something else in mind. If you miss the higher time frame, if you over leverage, or if you're impatient, or a mix of the three. Ideally, not all three, because you're going to struggle. But you have to have the patience to wait for a setup. You have to have the risk management, because eventually you will get it wrong. And when you do get it wrong, you hope that that loss is going to be small. Okay? And you have to have patience to wait for the setup, and then to wait for the retracement, and then the patience to also hold it to go higher or to go lower if you want to be short. Okay? That's the hard part. Knowing the concepts, knowing price is easy. That's why I do it all the time for you. It's easy to me. I can do this half asleep. Which is why I tell you stuff in the Discord all the time before it happens. Especially today. Hey, we're bullish, but we got equal lows. Well, we ran the equal lows, and now we're trading higher. Right. That's multiple moves in advance. Right. Because it's easy. You do this every day for like 11 years, and you'll be easy for you too. The harder part is going to be waiting because you're impatient, because you want to hurry up and make money, or you want to hurry up and pass a combine or whatever. And that you have to stop yourself from. Okay? So with that, I hope you guys were able to learn something today. Algorithmic price delivery. It delivers inside of macros. It makes lows inside of macros. Not every macro is going to be equivalent in terms of importance, like my X's. Some are worse than others, all right? But when you know where the liquidity is, we want to trade in that direction. Okay? That's what we want to do. We want to trade in the direction of opposing liquidity. And if you can do that, you're going to take really, really good trades. So, with that being said, y'all be good, be blessed. Drop a like on the stream if you have not done so already. I'd greatly appreciate that. How many likes we got? 34. Let's see if we can get a little bit more likes on the stream, guys. I would greatly appreciate that. It costs you nothing. Oh, I said I was going to open the chat and I didn't do it. See, you guys didn't remind me, man. You guys didn't remind me. You're all fired. I'll open up the chat for just a couple minutes if you guys have a comment or a last minute question. I meant to do that earlier. Sorry. I didn't set an alert chat. We got price alerts, but we don't have chat alerts. So that's on me. Yeah, Mason, I see you. I see you trying to sneak that in there. I see you trying to sneak that in there. Thanks, Shane. But yeah, that's all for today. That is all for today. You guys got a lot of information. We didn't even talk about Dow. Gosh. I'll tell you this in closing. Go mark up your regular trading hours gaps, especially the one from Thursday to Friday. Go to Thursday or Friday, or sorry, Thursday's close, Friday's open. Go to that regular trading hours gap and then mark your quadrants. And then go look at price today. That's your homework. Thanks, Victor. Bank holiday tomorrow? Oh, okay. Government reopen rumors. I think more people are interested in this $2,000 check people are supposed to be getting. They're like, oh, open, reopen, yeah, whatever. Give me that $2,000. Right? Give me that $2,000. Made the most of my trading career today. Thanks, John. Look at that. Miss Jackson. Look at that. The most in my trading career. Love to see that. Love to hear that. Alberto asked, realistically, how often does the market maker model show up per week on average, in your opinion? I don't know. I've never really done a study on that. I don't know. But a lot. A lot. And you only need 1 or 2 good trades a week to do really well in this. And today was one of them. You could have caught the short to go lower. Could have caught the short to go lower or the long to go higher. Or both. You know, if you're trying to be Spider-Man. But You only need one good trade a week. 1 to 2. But yeah. All right. Y'all be good. Be blessed, man. We'll be here same time, same place tomorrow. For the same price too, baby. See y'all tomorrow.